Hi everyone, today is August 12th. As usual, we'll start with low time frame, um, going through BTC and understand the local pattern first, and then we'll zoom out and go for high time frame and understand what BTC is trying to do and what it might do in coming days or weeks. So let's start with 4 hours. 4 hour is not my favorite, by the way. I'll just in case, because for last few weeks I was starting with 4 hours. You might think 4 hour is my favorite, so I'm going to change just to prove the point that it's not my favorite. So I'll go with 6 hours randomly, or maybe I'll go with 5 hours. Okay. Yeah. So basically, it's about understanding the local structure, and time frame is not important in my method. Like it's important only for recognizing different patterns at different time frame, because they change with different time frame. But otherwise, time frame is very sensitive to some of the indicators or oscillators that you use. For example, if you use 100 moving average, sorry, 100 moving average, I should not say days. 100, let's say you set SMA 100. You check on one day, it becomes 100-day moving average. If you check, if you set to 1 hour, then it becomes 100 hours moving average. And then you get different supports and all. So for indicators or oscillators, the time frame is very important. Choosing the right time frame matters. But in my method, it doesn't. In my method, my support and resistance are not specific to time frame. They are kind of universal. Only thing is, the importance is different at different time frames. So any time, if I'm highlighting any support on a weekly, for example, has more weightage compared to anything that at lower time frame. But all the key levels, resistance or support that I share on any time frame are universal in, so they do not change with a time frame. That's the point. So it's very different method. And yeah, only as I said, only difference in a higher or low time frame is the weightage. That's it. So low time frame has lower weightage for the support, but when you see some support at a higher time frame like weekly, it has the highest. So that's the point. Anyway, so I could choose any time frame at a lower level, like basically in hourly basis. It doesn't matter. Just a clarification to start with. Okay. Now we're focusing on consolidation because firstly, you know that it's consolidating, and the consolidation happens in three ways. One is it could go horizontally, like it did here, and sometimes it goes downward like this. Sometimes it creates channel. It sometimes it creates wedge, like down. I don't call wedge. Some of them are called wedge, are usually steeper. I mean, very steep. Like the angle of this line to me is not sharp enough or steep enough, which usually wedges. In fact, this is a wedge, which is like a particular. Especially if I draw from here, then actually this has, it's more like a channel, but not a wedge. But yeah, this is at least the angle. Yeah, it's not perfectly. This is more narrowing channel actually. Anyways, oh yeah, this one is a candidate for the wedge. So this is pretty sharp. We look at that. Look at this angle. Anyways, this is, it's not important. Point is, this, whether you names are not important. Point is, boundaries are important. So you take a particular segment of the wave and then say, hey, what pattern? As I said, name is not important. What pattern means in terms of boundary. So we have this lower boundary here, we have this upper boundary, and of course we could, I think I had one here. We could have one more like this, and that could represent the upper one. So the uppermost one is broadening in nature. Should I use different color? Maybe yellow. Yeah, it's broadening, and as I'm estimating that if this could go up and coincide with this one. And these are approximate numbers because this line angle is approximate, because you see these spikes, you can connect as many as possible and then it could give you this one. So probably this angle makes more sense. And if this is the trajectory or path, then we could see, let's say by month end hitting this 33, 34K range that we are estimating here. So that's the idea behind recognizing the pattern. And when I talk about pattern, the emphasis on the boundaries. So whether you take triangle as a pattern, right, or head and shoulder as pattern, these are different names because they have to be called differently. Um, but essentially, the focus is on the boundaries. So you can actually find out something which had never been identified. You can call funky pattern, something like that. So you can give any name, it doesn't matter, as long as the name is not given, just to respect the person who has discovered it. The point is, the whole idea is to see if any pattern is reoccurring in different assets, and see you can come up with a boundary which is consistent and provides you clarity. So this is what we're doing here. We are analyzing at a low time frame and trying to see, trying to find out the boundary. And this line was added last week, you know that. And look at so the price couldn't close above it. There were a couple of attempts, but not able to close. Now we can simply say this is super boring, but it also means that it's trying hard. So it got, look at this support here. It got bounce here, bounce here, bounce, so many bounces and so many rejections. So what this is pure bore and pure consolidation, and a boring one without any doubt. But is it bad one? Of course not. It's definitely boring one, but not bad. It's not bad because it's not approaching 28K. That's why it's not bad, simply put. Now, we cannot do anything about length of a consolidation. We have no choice, basically. We have to just sit tight and wait for the breakout on the upside and prepare for the worst, as we do, considering the supports. And we, in this call, try to understand from different point of view and come up with different levels for us to monitor and plan. This is what we can do. I mean, rest is just noise. Um, I try to make things simple as possible because trust me, I mean, if you are TA, you know that if you ask 10 different TAs, 10 different TAs would come up with 10 different levels, 10 different shapes or patterns, and probably not everyone would say the same in terms of direction. So that's the reality of technical analysis. If you're on Twitter, I'm not sure. Um, I posted one tweet actually just for fun. Basically, I took the BTC chart and shown the same chart as I mean, shown as bearish, bullish, and neutral. Maybe I can quickly do it here as well. Let me show you, because then you'll know. So the point is, um, the TA, it's all depends on how TA interprets eventually. Um, you use different methodology in technical analysis, but eventually TA, based on his or her experience, pick the right method, whether it's a pattern or measurement technique, whether you use Elliott wave or use Fibonacci or use any other measurement method, some kind of oscillator or indicator. It doesn't matter. Ultimately, you have to pick the one that works. So, but just for fun, I'll demonstrate that same chart without changing the time frame. I can I can depict that time frame. I mean, chart as bullish and bearish and neutral. So just for fun. So I think every time what goes in my mind is I try to make sure that I'm on the right side of the market. It's not about what I believe in. There is nothing called I. It's about market. So this is very important. People think I am bull, I am bear. That's bullshit in my point of view. Point is you have to be, I mean, we have to be tuned with the market because the market is the driver. We are interpreter. CTA are simply interpreter. We are not fortune tellers. We don't know the futures, nothing like that. We are simply the interpreter. It's a language in one kind of language, and we are trying to interpret the language of the market using different techniques. So that's how I put. I think this is the best way I could express what is TA. We're just interpreter of the market and interpretation of the price action and volume sometimes. Okay, so let's get back to the pattern. So you can say this is extending, and because this price is here on support, not somewhere 28K, there's nothing wrong, because that should be the first question, or that could be the first question. Is it going to be worse than what we have seen? I would say no. There is no sign. It's just a matter of time. This is annoying, disappointing that it couldn't break above from here. It couldn't close above this, but that's how it is. You never know. It might happen in next few hours. And those who leverage, it's very difficult unless you have a really good tool. It's very difficult in my point of view. At a at hourly basis or 15-minute or at a minute scale, it's very difficult. For consistency point of view, you might win, but you really need good tool for that, in my opinion, or an experience. The consistency. I mean, you could win some trade, but it's very hard, especially in the choppy market. Another tip that I would give, not an advice, but um, trade short-term ones need to be taken on breakouts, not during consolidation. So once you know the boundary of the breakout, one can take trade on breakouts, and you can set alert or maybe limit buy or something like that. You have to be prepared with a false breakout, like one we just we saw here. It happens. It's a part of the game. But the point is, uh, the short-term trades are good only on breakouts. And a longer term means swing trade, where you follow the trend at, let's say, weekly, something higher than 1 day. Basically, it could be 2 day, 3 day, 4 day, or 1 week. Then it doesn't matter. It doesn't matter, because only question you would ask that whether the trend is good or not. Only thing is, from a supply point of view, you would supply more money when when there is correction, we call buy the dip, but provided the trend is healthy. Okay, means the up. So I'm calling this particular phase as recovery phase, which is healthy, and that will turn into uptrend. I posted that particular chart. I don't have that chart here, but it's on the platform. You know that. So you refer it. So I have shared the big picture with you, and that will help you understand. Also, I posted the cycle specific chart, which is very, very important to understand for those who interested the scenario beyond cycle 5. Remember, this is likely to be the cycle 5. Why I'm saying likely? Because it has to close above 34K. 32, 33K is the next resistance, as you see on our screen. So I would like it to close above 34K, and then we can say the bull run will begin. There's one more level, one more checkpoint, which I always talk about, that is to be looked in. That's not a huge one, however, a very important one, which I'll highlight when time comes, because I have to refine that one when price progresses. So I'll let you know. So there's one more level, but I would call uptrend above 34K. There's no ambiguity in saying that. So from 15, 16K until 34K is a recovery phase. And beyond 34K, it is going to be uptrend with one important milestone in between, which I would like to see it cleared out, because that's one important checkpoint before. So you can say that that's a checkpoint for new all-time high. Okay, because sometimes the price could go, let's say, near 60K or maybe 70K, but we are talking about whether it will go for 100K or something like that. You know, that's something we have to, I mean, that level will tell us. The behavior at that level will tell us. So that's you will get it anyway. So no need to worry about that for now. So for I think the most important priority. So I had highlighted 3 levels. First of all, it has to close above this orange line somewhere here. I think I mentioned 30K. And then second level where we have this heart. So we would love to see here. That's why heart symbol, just you know, indicator that we would love to see price about, let's say, I don't know the exact number I said, but basically it's about 31,500. Yeah, I think that's a required level we have. Yeah, 31,500. And it will be on fire above this. Not like, yeah, then it should get momentum. Not so when I say fire means it's like this is where it's likely to ignite. I'll show you the prior bull run. Though I posted the chart, I will quickly go through it. Comparing the stage where we are compared to the prior bull run. Okay, so that's so for now. This has to go up, and you see that it's green. It's weekend, so the usually that's what we observe, that liquidity is very less. Liquidity is very less anyways, but especially on weekends, the liquidity is even lower. But sometimes you never know if it can make a slow progress. That would be wonderful. At least some of the alts are making move, which is good. They're at least positive. They were in red. Now I see them in green in the last few hours, which is very positive. So even short term looking good, because it's here not near 28K. And this is the path without any doubt. And these are the levels which I highlighted. So you may see that there's not much change compared to last week, but we don't. I mean, we don't have a choice there. So let me see on one day how it looks like. If it is different, it doesn't look different to me. not at all. So we have, this is the third consolidation phase as part of overall recovery phase. You see, so this was the first one, this was the second one, this is the third one. Okay. I know this is very cluttered, but maybe I should remove all this because we don't need this. This is taking some space and cluttering. We get more clarity. Yeah, much better. So this particular wave that you see so far until 34K is a recovery phase, and I'll then switch. So one day has nothing more, I would say, other than what we see here, the consolidation phase. And I think this is a neat trend line, very simple trend line connecting all three consolidation, 1, 2, and 3. Beautiful, very simple representation here. So on one day we can add that. Okay. Yeah, so this is good. Um, let's switch to weekly now. The weekly we have this white line already. And this is the path. So you see there is no change. If it comes down below white line, that will make us think, oh, what it wants to do, but there is some range, there is some space on a weekly. Remember, now when you look at weekly, your mindset should be different, remember. And as I mentioned earlier multiple times, that each and every investor or trader need to decide, am I going to track on a weekly, monthly, one day, whatever time frame? You cannot mix up. So you can mix up differently. Say 70% of my portfolio I'm going to track at weekly, and 30% of the portfolio I'm going to track at one day or whatever time frame, lower time frame. That is doable. But you cannot do, or you should not do, not an advice point of view, of course, but my experience point of view, you cannot mix and match, because what happens is the higher time frame requires higher tolerance. Remember. So if I said 28K is important at, let's say, 4 hours, 5 hours, or one day, it's not very important on weekly. What is important on weekly is 25K. Remember, I mentioned this. The 28K is valid, but it's not here because it's minor one from a weekly time frame point of view. The support of 28K is a minor one on a weekly time frame, on higher time frame. So what is important is 25K. So 28K is a valid one, but not applicable to weekly time. So because it has lower importance. So we focus on the big ones on a weekly time frame, which is a higher one. So that's the clarification. Otherwise, sometimes someone could get confused that, okay, should I refer 25K or should I refer 28K? There are two answers to it. I mean, there are two parts to the answer, I would say. One is, first of all, you have to first calculate what is the risk that you're taking with respect to your exit level. And that should be the first one. And second, you can use the support and then decide which support makes sense with respect to the risk that you're taking. So that way, and if you are someone who is interested on a weekly, then you would see the risk with respect to support at a weekly time frame, not on a lower time frame. Okay. And Of course, if that, let's say if someone says, hey, 25K is very low, there's a lot of risk. Okay, then weekly, if weekly is not suitable for you, then you go on a lower one. Now, what happens when you go on a lower one? There's a pros and cons. There, each and every time frame has pros and cons. What is that? So if you say 25K is very low, I cannot, hold or keep my positions because it's too deep. Okay, if then 28K is the one. Okay, fine. Then, but it is possible that 28K is broken, but then after a few days, it could recover. Let's say I'm just hypothetically saying. So one has to be ready. So what happens when you go lower time frame? You might face more in and outs compared to high time frame. So when you go at a high time frame, you need more tolerance because the distance of the resistance and support is more, but at the same time, it offers you more longer trade. It offers you longer trade, so you don't have to. It cuts down noise. You stay with the trend for a longer term. So these are the advantages and you know downside, or you may say limitations of higher time frame and lower time frames. So that's why I said sometimes it's not either or. Sometimes you can say 50% of my portfolio for this, or maybe 70% of the portfolio, whatever percentage you decide for longer term. And so one can come up with two portfolios like that. Just an idea. So anyway, so there are a few. This is about portfolio management and planning, by the way. Okay. What else? So on a weekly, there's not much change, and it's good to see green candle first of all. Without drawing, let's see how does it look like. So it's not a big one, but it's green. It's not somewhere consolidating near the lows of the last week. So that is a big deal, right? It's a green one, and the green is good, right? So I'm more than happy with that. I'm more than happy. I have no hurry because I know that uh, it is crazy because look at these candles. We have evidence that if it starts moving up, it can cover the ground very easily and quickly. So if it starts making move on the upside in a matter of a week, it could hit 34K in a matter of few days, maybe within a week. So, and we have seen it. So it's not hypothetical. We have seen it. Look at this one. So why not? Because this is going through consolidation, and that can be a breakout, which could actually push price up in 33, 34K range easily. So that's why we cannot say this hour it is going to happen this day, but it's close. We can say it's close. Yeah. And anything, if anyone is expecting more than that, I would say it's about asking someone who knows the future, and in reality no one knows. They won't come, I mean, not everybody will admit it, but they'll add their guesswork in analysis. I'm not that. I'll say it's close. It can happen anytime, and I'm highlighting what are the levels to be watched out from a risk management point of view or support point of view. um but um but we cannot say this is the hour, this is the day. Yeah, that's that's not possible. You can say it's very close, and I would say it should happen in next week. So that kind of ranges can be given, but not exact um like hourly basis or particular day you can call out that one. Right, so this is without drawing. As you could see, what you see is this is a recovery phase, and as I was talking about this, comparing to the prior bull run, I would compare this structure with this structure. It's not going to be the same. It doesn't. never be the same. But this particular phase that you see from the bottom, November bottom until now, is very similar to this one. Of course, not from a shape point of view, but from a progress point of view. And in fact, there is some similarity that there is a quick move on the upside, consolidation, upside consolidation. It had two consolidations. Here it has three. So that kind of comparison is useless. It has two, it has three, the shape. That's not the point. Point is, when it makes bottom, it recovers, like this was a near vertical move, and this was also near vertical move in a way. Here it has slowed down, but and similarly, this is a segment, it slowed down significantly. And it makes sense because this was point of rejections earlier. And then this was the breakout level. This candle, the month of October, middle of the October, this is where, in my definition, the bull run began. But when the bull run continues like this, retrospectively, we say that the bull particular run started from here. From uptrend point of view, uptrend actually started from here. In my definition, from a cycle point of view, the cycle started from here. In this cycle, there are two segments. This is the first segment, and this is the second one. This is the correction, and then this was the second one. Anyway, so we had this bull run here, and then another bull run here, right? And the overall run was under cycle 4. Okay, and now this phase is comparable to this one, basically. And from here onwards, we are expecting to get momentum. Like, you see the momentum. So when it gets momentum, you don't see this kind of close by consolidation. The consolidation happens, but at distance. Here there were only two consolidation and a top. If you look at even this 2016, 2017 bull run, it was longest one, longer one, continuous one. These were consolidation phases in between. The shape was totally different, and this was the climax. This was a bit different. It started from here, then correction, and then so it had two major segments, especially because of the COVID. And this is another bear cycle. Now this bear cycle, if you look at this, is pretty straightforward. Especially when you look at the line chart, you get more clarity. Like this. First segment, second segment, and the third segment. There were 3 segments, especially this one because of the FTX. Otherwise, it would have gone up from here. This is extension. Like this was extension because of COVID. This was an extension because of FTX. So sometimes, cycles have predefined structure. Predefined means not that pre-planned. I should not say predefined, but it's like usual cycles where events are not driving, but usual when it is overbought, it tries to normalize. That's what I mean, right? Cycles are nothing like. I mean, all the cycles are like that. They from let's say there is average price and then go above average and then comes to the average. That's how it is. So for an example, you can say, if you draw a line like this, you see, this is my beginning, let's say, this is my reset of the clock, this is another reset. So if this is my trajectory, let me see if I get a cleaner chart. Oh, let me add one more. I just want to show you something. Basically what happens, the nature of the price is So look at that. In fact, not everybody will agree to me, but I would call. I'm calling this cycle 5 because we don't know the length of the cycle. But I I I'm inclining more towards continuation of cycle 4, because to me this one began in December 2018. As I said, this was the first segment, then correction, second segment. So we currently calling this as fourth cycle, right? Why fourth cycle? Just a quick recap on a big picture. This was the first one. This is the second one. This was the third one. And this one from December 2018, fourth one. And everybody is calling this as a potential fifth one. I'm right now calling fifth one. That's not a big deal. It's not important, but I feel that I would like to call this is a continuation of fourth one, just because it is nicely aligned with a trend line, which actually representing cycle 4 to me. So if I go by this, so it's not important, as you know, labels are not important, whether you call fourth or fifth, it doesn't matter, but it's important how you uh, track it from a trend point of view. So if I take this approach where I'll say the trend began here, and then this was the first segment, and then got reset here, then this was a second segment, and then got reset here. So the point I'm trying to move is price deviates from the base or average or its trend, and uh, trend's average level, right? It could be line or it could be moving average, whatever you take. Basically, it moves away and then comes back, right? It's resets. So because it's resetting here, I'm more inclining towards cycle 4, continuation of cycle 4. And I would say this was more of a forced bear cycle because of Fed's policy, not because of Bitcoin's fundamentals or crypto fundamentals. This is more so. If this drop was more, this was because of COVID. If this was FTX, then this whole entire thing is because of Fed, because they raise interest rate, and you know that if you know the Michael Saylor is buying so many bitcoins, do you think that he's buying on cash? No, no way. He's not buying on cash. He's buying on credit. Okay. People buy on credit. Most of the money that you see in this asset classes is credit money. Why? Look at you Google it. When you talk about money, so for an example, when you buy a house, you take loan or mortgage, right? You take debt basically. Is it cash? Of course not. So when you look at your portfolio, you will see that you have more debt. Of course, you have asset in place. So your house is asset. But what I'm trying to say, when you transact, so when you transact everyday basis or on a big events like buying house or car, something like that, what do you use the most? So from a money supply point of view, the credit part is much bigger, probably 90%, and the cash would be very small amount. This is how it is. So the point is the same is true for buying this asset. So now I'm using my cash amount, of course, but the moment you buy a leverage trade, you are actually taking debt. You don't know that, and not everybody knows, but actually it's debt, and that's why they have to liquidate to recover that, because your whatever money is a collateral, and that's why they liquidate your money. unlike spot trading where they cannot do. It's because you're using the hard cash. That's why they cannot touch it. But if you leverage, they liquidate because you're taking debt. That's why. Anyways, the point is the money that you see in the crypto is all, I would say all means most of the money is credit money. And that's why when the interest rate goes up, the credit money becomes expensive. And that's why you see sell off, because then asset need to be sold off to cover the debt, because they have to pay interest rate. They cannot pay the interest rate unless the asset grows. If the so if the it's basically a vicious cycle. So if the new interest rate goes up, basically, and the new buyer will try to, I mean, the some of the holder will try to sell it, because they otherwise they cannot pay the interest, because, and then it basically it's a snowball effect, and that's why the price goes down, more selling happens, and then price goes down because everybody has to return the debt, and that's what happens. So if you understand the big picture, this is what happens, and that's why the credit money plays a big role. So if the sailor has billions of dollars of Bitcoin, don't think he has bought on cash. It's credit money. So it's just that somebody is trusting his fund or entity and giving the money indirectly. So if you think that he has the Bitcoin, actually the lender has the Bitcoin. Like, unless you pay for the house or the mortgage, house mortgage, the house is not yours. Technically speaking, it's banks or lenders. You know that. Similarly, that Bitcoin is not seller's Bitcoin. Okay, that's that Bitcoin actually belongs to the people who, or entity or company who gave loan to him. Of course, if the price goes up, seller will repay that loan, whatever interest he has decided, and Bitcoin will be his. It's like your mortgage. You pay off your loan or mortgage, you get your house back after 10 years, 20 years, whatever the duration. This is how it is. But technically speaking, seller is not the owner of Bitcoin unless he bought whatever he has bought on cash. Of course, he's owner. If he has anything that is not bought out of cash, he's not technically an owner. So I think this is very interesting stuff. And anyway, I digress, but it's very interesting subject. So I thought maybe I'll spend some time. So the point is, this particular move was more like enforced one because of the Fed's policy, because Fed started stopped QE, quantitative easing, from December 2021, and it was clear-cut sign. And then they indicated that interest rates will go up from 2022, and that's why this is the reset. So interestingly speaking, single line is able to represent the whole entire move. It's so amazing. I mean, sometimes we do complicated things. Sometimes, we use some, complex method. But when you see the single line is actually representing last, I would say, 5 years of trade, 4.5 years of price action, then you feel so thrilled. At least I am. I'm sure you are too. Single line is telling everything. Now, here, of course, the one big worst case scenario that I had highlight on weekly, which I'll highlight, you see this yellow one. I'm not saying this is happening, by the way. I'm not saying, right? But the reason why I had highlighted, because of the pattern that is visible here, where this is a left shoulder, this is a head, and this is the right shoulder. Now, if this right shoulder breaks below this, remember, then this is a neckline. So this head and shoulder is at angle, remember. And if this goes down like this, then we might see something catastrophic. Okay. But you know that this point is far away, 23K level, maybe 23, 22K range. So it's so far, we are not concerned yet. But when we talk, it's up when it's about education, when it's about learning, and thinking about different scenarios, all the scenarios matter. So I have very different sometimes point of view um, on different things. I'm sharing my point of view. You may not agree with everything. That's all right, you know. But I'm trying to give my justification on what I'm seeing. So this has very low probability, and we're not even talking about this. But it's always good to know. So this is so amazing that one single line is representing 4.5 years of price action. And as I said, this is a reset of this trend. So the trend is up, as you could see. So this was a reset, this was a reset, and there could be one more. And probably the same line could help us, if we can extend in future, if this goes up like this, let's say whatever 100K, 175 or whatever, who knows, when it comes down, the same line might help us. We'll see, right? But at this moment, this line is so beautiful, elegant, I would say. Look at that. I mean, a single line is telling me everything. Anyway, so what I'm trying to do is that we started at 5 hours. I shown to you what is the pattern at 5 hours. Then one day we saw three patterns. Then what we did was comparing with the prior consolidation, and then with this consolidation, which is very much similar. So this particular stage is very similar to this stage, September, October month of 2020. And like the one that it started here, it may start something similar to that. Right. So we have to wait and watch for that. And we know the levels at different levels, 28K is an important level at a lower time frame. 25K is very important now weekly, and so on. And if I have to highlight the 4.5 years of trend, then this the trend line that we have to watch out, 22, 23K range. This must not be broken by any means. If this is broken, I don't know what might happen. Okay, so this is more from education point of view. Okay. I hope you find this session helpful. Mm, oh, I mean, Bitcoin point of view, we have to quickly go through other reference data without missing them. But I want to make sure that Bitcoin is understood, because Bitcoin is the most important one out of all. Okay, let's look at DXY. Right, so DXY tick, 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 is inching towards upper range. Okay, this is a little point of concern, but not really. Concern means not risk. Concern means it's progressing. It's not going down, this particular segment. So the overall trend is going down. There's no doubt about it. So there's no confusion about that. It's under correction. This particular bounce is actually giving hard time at this moment. In fact, all these bounces created some sort of Bitcoin's consolidation phase, I would say. It's not going to be exact by day, but but you if you compare closely, you will find that, yeah, so because this is bouncing, this particular phase is where the Bitcoin is also consolidating, and so on. So this must not cross 105. Yeah, if it closes 105, then the crypto will be in trouble, in simple words. So I put a question mark because this is our checkpoint. This is so it could get rejected from the orange trend line, upper one, and goes down like this. Or in a worst case, it might go a little higher and then goes down. But if it closes above 105, 105, then I think that's going to be bad. I would not like to see that. Um, Yeah, based on the historical references, by the way. So at this moment, the XY is not a risk, but a little concern for sure, because it has to go down from here for crypto to, you know, um, get a free space there. So that's the challenge. So I would say this is a challenge and a bit concern, but not a risk. If you look at Nasdaq, Nasdaq, this is the first correction, like this one, second correction. I would say this is a small one. There's also a small one so far, but Nasdaq is more consistent and most like it's stronger than Bitcoin, because it hasn't gone through deeper or longer consolidation. The moves were not as aggressive, which is fine, but the moves or upside move were like progressive and steady, unlike Bitcoin, which were like only four candles. In four candles, it went up. This was more slow and steady progress. Nice one, very easy to digest. And yeah, this is the second correction after this one, which is not a big deal. This is teeny tiny, as you could see. This is not point of concern at this moment, unless it comes down to really low as 13,500. Um, this is not a concern. In a worst case, it could come down to 13,400, 700, sorry, 500, 700 range or 14K range. Even if that happens, it's not going to kill this one. Nasdaq is looking good, strong. Yeah, so yeah, the money is more into stock market and the liquidity is not much in crypto at this moment, but that could change. But this is the present time. Let's look at the bond yields. Bond yields are above green. So this is another point of concern to me. Now, bond yields, sometimes the bond yields and crypto could go along, because sometimes you know the markets are, this stock market and crypto market, in my opinion, are speculative in nature, where the spot price is actually the futures price. And so sometimes stocks and crypto rally in anticipation that Fed or central bank will pause in certain quarter or month, and they rally in advance. So that the Fed hasn't paused, but it rallied for last 6 months, because the market is anticipating pause. But this is the yields, the bond yields, the fixed that debt market, which goes by the fund rate, and it's a reflection of what fund rate is. And if you see, I pick 10 years. If you pick the shorter term, it is more relevant to the current fund rate. But 10 years is a medium range. You can go 20 years, 30 years. So 10 years I took somewhere in middle. And it is not looking good. I mean it is good from a yields point of view, but it is indicating that the Fed is nowhere near stopping the hike. It's the bond market is saying. I'm not saying. As I said, I'm just an interpreter. When you see this behavior, the bond traders are thinking that the yields could go up even further, and they believe in it. I mean, the Fed might go up, or may keep at a higher rate, or little they may skip one and then go up later. So they are the people who believe that the inflation is nowhere near to their target, and they'll continue to raise Fed's fund rate. So we can't help. That's what they think. And if you don't know, the in the market, some traders are just bond traders, and some traders are just equity, I mean stock traders. Some firms trade both of them, but usually there's a major division. Like if you look at BlackRock is major into fixed income, like debt trading. Some firms like Citi has mix of both, but some firms are dominantly into one particular asset classes. But yeah, anyways, the point is, the point I was making was bond traders have different belief at this moment, and the stock traders or investors have different belief. That's what usually this is not the case, but this is what we're seeing. So that means there is a contradiction among them. We'll see who wins. Yeah, so the yields are going up means the bond is crashing, and the stock market is rising. Okay. What else? Bitcoin dominance. Bitcoin dominance is a bit high. Yeah, but in this range. In this range means Bitcoin is in command. Below this means the alt are outperforming most of them. That's what we'll see. So if it goes down and break below this 48K and comes down, then that's where people call alt season. People ask me when is the alt season. First of all, I don't like that term, personally speaking. I always believe that it's all about selecting certain coins which have which uh, which um, which have higher potential, and we have to see which one outperforms Bitcoin from a trend point of view. If Bitcoin is doing much better, then what is the meaning of altcoin? There's no meaning. So whatever coin that we choose for longer term has to outperform Bitcoin. So it's about selecting which outperform Bitcoin, in my point of view. And when the Bitcoin is beaten up, I mean, Bitcoin dominance goes down below 40%, 45%, and lower, like what we saw here in past, like this one, like this one. This is where most of the coins rallied. But I don't think whatever we have seen in past will happen in future. I have a reason, and the reason is simple. As time goes, the investment will be more on quality coins, and the first penny will go into Bitcoin, and then probably Ethereum, and probably then rest of the coins. Depends on their choices. So when you talk about fund ETF, that's where the most of the money is going to come, and we're talking about ETF for Bitcoin and probably Ethereum, not many other. Maybe a couple of more might come. Who knows? LTC or something. We don't know. The point is, um, the money will first go into this too. So these coins will grow faster in terms of market cap eventually, because the mainstream is not going to invest in small ones. Remember, the big firms do not, because for them, clients' risk management is more important. In personal investment, people could put some money, but remember, when they have 100%, let's say out of 100%, they could allocate 20% for the smaller one, but 80% or higher, basically majority could be for the top ones. This is what they generally do, and big firms with a big money don't even go for that kind of split. They would just go for Bitcoin, and reason is simple, because the risk with other coins are high for them, because they are not a short-term traders, they are for long-term. Usually they go by years, and because they have to keep that in custody, they have to think about taxes and so many other things. They cannot just buy and sell. So whatever they buy, they have to keep that in mind, that it can be for 1 year or 5 years, or could be 10 years. So they have to think from that point of view. And if they have to think from that point of view, they are going for Bitcoin, because that now security related debate is going on, legal case is going on. You never know what might happen. So that's why. And the worst could happen, BSV could become the main coin. There is a case in January 2024. Don't miss that. It's against Copa. It's a Craig versus Jack and other, you know, don't miss that legal case. Okay. So if Craig has won the white paper, right now he has the copyright in UK. I mean, he has the white paper. He, uh, and if he wins the database rights and the code right, then then um, there can be major shift. So you don't know, the definition of Bitcoin will change. Okay, so be ready for that as well, I would say. um, I'm not taking any side. I'll go with what court decide, right? So at this moment the white paper is with Craig, copyright point of view. Okay. Anyway, so again, this battle is in UK, but they're planning to fight this battle in US courts as well. And if they win in UK, you know that UK is not a small country or some like El Salvador, right? It has importance. So that's why I would highlight. So the focus is not BSV. The point is, I'm trying to say that in fact this is in, if you look at ETF disclaimer of BlackRock, you'll find that they will choose the chain which they think is right. In short, I'm not going by the legal statement, I mean exact words, but this is the interpretation. So they have discretion, basically they can choose whatever chain they want to select. So that's the worst scenario, which people are not anticipating at all. But me, even if the probability is remote, it is in my to do. I cannot just ignore it. And being a technologist, I really cannot ignore it because I know what BSV is doing and what BTC is doing. So I'm equally focused on BSV, to be honest. Even people don't like BSV. Anyways, BSV is not the topic. My point is, the people like Coinbase, when the Coinbase went public, they highlighted one risk, that an identity of Satoshi is a risk. If you can Google it, identity of risk is a risk, and they have declared in their IPO. So everybody knows that if identity is revealed, in case if it reveals, and if scenario changes, then everything changes. Remember, then it would be catastrophic for market. So we'll see. So don't forget January 2024 legal case, I would say. We don't have to take side or assume anything, but we cannot ignore that event. So I would like to highlight that event to everyone. You can search by COPA, COPA. Okay, you will find out. Anyways, so the point is, when the big players come, they go for Bitcoin because of regulatory challenge or some legal challenges. So the money will come in Bitcoin first. So in future, I know I digressed, but everything is related. Whatever I said, that all cycle that we used to call, I don't think each and every you know coin will go up, because there's so much of mess in my point of view. So we are trying to pick coins which are likely to do better than Bitcoin when the Bitcoin starts bull run. And if we see that any other coin that is shining, and probably the one that we have in the list is not doing better than Bitcoin, we'll replace it. So my attempt is to see that all 15 coins that we have would do better than Bitcoin. If not, we'll replace it. So I don't care about all season, to be honest. I just care about whatever 15 coins I have taken and do better than Bitcoin in terms of percentage gain. Okay, that's an attempt. So yeah, so we cannot talk about the season and all. We don't know. It's all about selection. So that's it. I think I covered everything that I wanted in this first session, which is usually the Bitcoin, some best practices, which I covered a lot this time. And we looked at different time frames. We have looked at the nice white trend line, beautiful one. This one, and yeah, bond market we talked about, Nasdaq we talked about, DXY. So I think we covered everything. But feel free to ask me more question if you have. Then we'll change. I will go for the second part. Thanks, everyone.